On the earnings front, after the bell yesterday, internet giant Yahoo reported second quarter results that were in line with analysts' expectations. Earnings per share came in at 13 cents. Net income increased substantially by 570% to $755 million compared to the year-ago period. Revenue higher by almost 44% to $875 million, but the street was somewhat disappointed with that latest figure. Joining us now with more details on the company's report is Susan Decker. She is the Chief Financial Officer at Yahoo. She joins us from Sunnyvale, California. Susan, welcome back. A pleasure to have you with us.
Thank you. It's great to be here.
The stock market is not impressed with the results, even though they were very strong by many standards. Is the street expecting too much?
You know, it's hard to know what the street's expecting in any one quarter. For us, we were really pleased with the results. They were up 44%, as you indicated, in top line. Our operating cash flow was up 57%. The free cash flow was very strong. And really, in addition to the overall growth, which we're really pleased with, the diversity of the growth is terrific. And we couldn't be happier with where we came out.
There was one analyst quoted on a variety of wires as saying that one of the reasons the street is a little worried is that they feel that you're a victim of currency and also seasonality. How much did the currency and the strengthening of the U.S. dollar play into the results?
Well, let me just start by saying that our overall mission is to develop the most essential products for consumers on the consumer side, and our financial mission is to maximize long-term free cash flow per share. So the issues you raise are shorter term in nature, but in terms of seasonality, we do have seasonality in our marketing business like every company that is in that business. This quarter actually is a tougher seasonal quarter for search, but a very positive seasonal quarter for brand. So net, those sort of offset each other, and we ended up right where we hoped we'd be. Our marketing services business was up 43% year over year, which extends our lead in terms of gaining market share. So we're very pleased with that.
Well, you know, on the surface of it, when you look at it, it's a very impressive result. But, I mean, you were on the street for many years, so you know how fickle the market can be about these things. And the worry is, and it's dragging down other stocks that are in your space as well, is that there's a slowing in the pace of online advertising. Do you get that sense in any way, shape, or form from your business?
You know, our marketing services business in Q2 was up 43%. That was the same rate that it increased in Q1. That comes off of 2 years in 2003 and 2004 of growing at between 39 and 40%. So to be growing at 40% a year for 3 years is, on the base that we have now, is very impressive. And we are very confident that the most important thing that drives our business is that consumers are continuing to come to our service. They're expanding in terms of number. They're deepening in terms of their reach. And ultimately, we offer a very attractive ad platform to marketers.
When you say they're deepening in terms of their reach, what do you mean?
I mean, they're spending more and more time with us and consuming more and more of our services. One of our really major focuses of the company over the next 5 years is to develop better and better products and services, come up with ways to keep them there, to personalize some of the kinds of content they might consume, to create communities so that they can share and discover new information and entertain themselves. And we're just at the beginning of that whole cycle, and we're really pleased with what we've been able to deliver, but think there's much more to come.
On that particular point, you know, you've pointed out the strengths of the business and the strengths that contributed to the gain in net income and the like, but what would you say are the biggest challenges for your company?
Yeah, our challenge remains to make sure that we focus on the most important things. We touch just about every possible opportunity on the internet for consumers and for businesses, and we need to make sure with all of those opportunities ahead of us that we're really focused on the ones that are going to be the most important for consumers and for our business in the long term, and that's a great problem to have.
Indeed. Susan Decker, thank you, Susan. Susan
Thank you very much.
Yahoo's CFO. This is how the company has performed over the last year. We showed you today's chart. It is down 11%, or $4.29 at $33.44, but a fairly steady performance over the last few months.